Elon Musk, Jeff Bezos, Larry Ellison. These men are worth hundreds of billions of dollars, and yet they almost never sell their stock. So how do they actually access their wealth? How do they buy mansions, yachts, private jets, without triggering a single dollar in capital gains tax? The answer is 3 words: buy, borrow, die, and it's completely legal. Here's the thing most people don't understand about wealth. Owning assets isn't the same as owing taxes on them. You only owe capital gains tax when you sell. So if you bought Amazon stock at $10 and it's now worth $3,000, you owe nothing until you sell. But the moment you sell, the IRS shows up. Long-term capital gains tax is 20% for high earners. Add state taxes in California or New York, you could lose 30 to 35 cents of every dollar. On $1 billion, that's $300 million gone to taxes. So billionaires don't sell, they borrow. Here's how buy, borrow, die actually works. Step by step. Step 1, buy. You buy and hold appreciating assets, stocks, real estate, private equity, assets that grow over time. You hold them, you don't sell, your net worth climbs, but your tax bill, 0. Step 2, borrow. Now you need cash, maybe for a house, a business, lifestyle expenses, whatever. Instead of selling your stock, you use it as collateral for a loan. Banks love this. They'll lend you 50 to 70 cents for every dollar of stock you pledge. So you have $10 million in appreciated stock. You borrow $5 million against it. No taxes owed. The loan isn't income. The IRS doesn't touch it. You live on that borrowed money. You pay back the loan using dividends, new income, or another loan. The interest on that loan? Sometimes as low as 2 to 4%. Way cheaper than selling and paying 30% in taxes. Step 3, die. This is the part that sounds dark, but it's the genius of the strategy. When you die, your heirs inherit your assets. And under current U.S. tax law, they get what's called a stepped-up cost basis. That means the IRS basically resets the cost basis of your assets to whatever the value is on the day you die. So if you bought that Amazon stock at $10 and it's worth $3,000 when you pass, your heirs' cost basis becomes $3,000. They could sell it immediately and owe 0 capital gains tax. All that appreciation completely untaxed, forever. This isn't theory, this is documented. In 2021, ProPublica published leaked IRS data showing exactly how the ultra-wealthy pay almost nothing in taxes relative to their net worth. Jeff Bezos? Some years he reported so little income he actually received a $4,000 child tax credit. Elon Musk paid $0 in federal income tax in 2018. It's not that they cheat, it's that the system allows this. Their wealth sits in stock they don't sell, stock they borrow against, and eventually, stock their heirs will inherit at a stepped-up basis. Now the obvious question, can regular people do this? Yes, at a smaller scale. First, buy and hold index funds or appreciated assets. Stop selling every time there's a dip. Time in the market beats timing the market. Second, understand that home equity lines of credit, HELOCs, work on the same principle. You borrow against your home's equity without selling your house. No capital gains, just a low-interest loan. Third, if you have a significant brokerage account, ask about a securities-backed line of credit. Most major brokerages offer them. Schwab, Fidelity, Interactive Brokers. The numbers aren't billionaire level, but the principle is identical. You don't need to sell your winners to access their value. Now, this strategy isn't risk-free. If your collateral drops in value, say your stock crashes 50%, the bank can issue a margin call. They force you to either add more collateral or pay back the loan immediately. This actually happened to several executives during the 2008 crash and the 2020 pandemic dip. It's also why billionaires don't borrow against 100% of their holdings. They borrow conservatively, maybe 20 to 30%, to give themselves room. The lesson? Borrow against your assets only if you have a cushion. Don't max out. There's also a growing political debate about this. Some lawmakers want to tax unrealized gains, meaning you'd owe taxes on asset growth even without selling. It hasn't passed, but it's been debated. If it ever does pass, The buy, borrow, die strategy becomes significantly less powerful. For now, though, it's legal, it's used, and understanding it explains why the Forbes 400 seems to grow richer every year while paying surprisingly little in taxes. Here's the takeaway. The wealthy don't think about income. They think about asset accumulation and strategic borrowing. Buy assets, let them grow, borrow against them instead of selling. Pass them to your heirs at a stepped-up basis. It's not magic, it's math, and the tax code was written to allow it. Now you know the playbook. If this video helped you see money differently, hit subscribe and leave a comment below. What other billionaire money strategies do you want us to break down next? Fuel your wealth. See you in the next one.